Mahesh Patil is joining us now, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good morning. Good to have you with us here as always on CNBC-TV18. What's the overall portfolio thrust now, Mahesh? I mean, across funds at Aditya Birla and fund managers, I mean, how are you thinking about markets and opportunities ahead?
Yeah, good morning, Prashant. So I think the markets, done pretty well in the last couple of months. I think the fear, about where the bottom is going to be, I think that is behind us. I think markets clearly have bottomed out, and progressively we have seen even the global markets slowly inching higher. But I think the market overall, we don't see a big upside really from a near-term perspective. I think it's going to be more stock specific now from here on. And we've seen that, right, post the quarterly numbers also in the last couple of months. The individual movement in stocks has been much sharper, and the breadth of the market also has been much better. So I think it's really from a portfolio action point of view, it's stocks which can outperform the market over the next 1 or 2 years. I think that's where the focus will be. And as I've been mentioning earlier, we've pretty much really focus on the domestic sectors in a big way, be it banking and financials, the auto sector, the industrial capital goods sector, the real estate sector. All these sectors are showing signs of improvement. We don't see any major stress or slowdown over there. And I think this year, while the overall headline top line growth will be slightly muted because we expect that yesterday the GDP number came into a very reasonably strong numbers over there. But I think the nominal growth this year could be slightly lower. It could be to large extent driven by margin improvement on the back of lower commodity prices. But overall, I think we are seeing a fairly decent earnings growth even in FY24. FY23, we ended with around 13% Nifty earnings. But I think we expect a similar growth next year. So I think the market should be steady. Upset, probably room for upset from here because the valuations have now kind of moved up. The market is slightly above the long-term average. We expect the returns to be, at least with the headline Nifty, to be slightly muted, but I think broader strength should continue.
Okay. How are you feeling about some of these pockets where data has been improving over the last couple of months? So we were just making a mention of the auto stocks. The first tick has come out, the first data point from Bajaj Auto, but it's looking pretty good. Domestic sales have recovered. Exports are not as bad as they were about a couple of months ago. What's your own sense of, these pockets? Do you like them? Is it a good investment opportunity now?
The auto sector, we've seen that the commercial vehicles were doing well. And even in the upper end of the auto sector, like the premium vehicles, both in four-wheelers and two-wheelers, were recovered early. It was the bottom of the market, which was still weak, and mainly because we've seen the rural demand, got impacted last year and is still recovering from that. But I think there are early signs now. We are seeing a recovery in the rural side. The rural wages now, real wages, have started to improve in a positive territory, and I think in the next coming months or next quarters or so. I think if the rural demand picks up, I think you will see the, especially two-wheelers, which have been still weak. They're still probably 5% below the earlier pre-pandemic peak. I think that could see a revival going forward. And we are, slightly constructive on the overall rural demand. We believe that as we move into the end of this fiscal year, second half, looking at elections next year, and this is a pocket of the market, where the government will probably try to do something and provide some stimulus. So I think that should aid overall auto sector going forward.
All right. Hi, Mahesh. Good morning. Mahesh, what about the IT space? Challenges are clearly still there. The stocks, though, have been holding up despite rather weaker than expected numbers. What's the call from here on? If you're looking at it from a longer time frame, does it make sense to get into IT now?
Yeah, the IT sector, again, it's to some extent taking cues from what's happening globally, right? We've seen the NASDAQ also do fairly well. Global IT names have also seen a significant up move in the last 1 month specifically. Though we think that this quarter would still be weak, at least probably this is a quarter where you will see the overall outlook or the guidance probably bottoming out over there. And So I think to a large extent, market is factoring that this year will be a slowdown. You will see, especially for the top IT companies, the growth will be somewhere in the in the mid-single digits or so. But I think structurally, I think we still believe that the overall spend on digital, right, which has started around 2-3 years back, I think that will continue. There is some amount of cut in terms of the discretionary spend this year, but I think that will normalize next year. And I think given that, I think this will be I think next probably 3 months could be a good time to really slowly increase weight in the IT sector. So I think, I mean, the valuations there have corrected now, though they would still be slightly above the pre-COVID levels. But I think looking at we still believe that the growth in the IT sector, barring this year, would still be higher than what it was the pre-pandemic levels. And that would mean that the slightly higher multiples could sustain. So it could be a good contra play, especially slightly with the medium to long-term view, I think. But I think spreading it over the next 3 months, I think would be ideal time to really accumulate some of the IT names.
Mahesh, do you guys have a fund giving exposure to the NASDAQ?
So we have a fund, yes, exposure to the NASDAQ. And I mean, 2-3 months back, I think that thing was clearly when the NASDAQ was down, I think it was a good opportunity, and quite a few investors really looked at that as an opportunity to increase their overseas exposure, because currently there is a constraint in terms of overseas investment, right, for the mutual fund setting. But I think the passive fund like the NASDAQ is where the option is still open for investors to participate. But I would still caution there. I think we've seen a decent rally on the NASDAQ at this point in time. I think while the US slowdown has slightly pushed back a bit, a couple of quarters, because US underlying growth is still very strong, but there is going to be some disappointment, I think, later in this calendar year. So I think one would slightly be cautious and not really get carried away by the recent rally, what we've seen in some of the IT stocks globally.
30%, for 5 months' work, right? It's just incredible what we've seen in the NASDAQ. But thanks to the largest 6 stocks, that's it. But I mean, returns are returns in that sense. But point taken, Mahesh. Just a very brief word on financials. Many are talking about interest in smaller pockets within financials. Microfinance is a theme, comes up more and more when we speak with investors. These are smaller areas for very large funds like what you run. You of course need exposure to larger ones as well, but is it spreading out across the financial space? Interest, not just top banks, but broader areas as well, like MFIs?
So in the last couple of months, we've seen as concerns about interest rates, right, peaking out, and the markets got a feeling that rates hiking cycle is behind us, and you could see rate cuts, not immediately, but down the line. I think that has led to the focus coming back to the NBFC sector as a broad base. It underperformed the banking sector last fiscal year. I think this year you would see some of the NBFCs starting to gain leadership in the overall banking and financial services space. And there again, I think a lot of the second-tier NBFCs are now getting traction because they were pretty much kind of subdued. They were quoting at valuations probably below their long-term averages. And overall, I think the demand side, on the asset side, the growth has been fairly healthy, especially on the auto sector. If you look at is picking up, consumer, the personal lending is also now picking up. Mortgages have been growth has been fairly strong. So I think that is, and especially about the microfinance sector, again, that's a sector which we are positive on. And that had gone through a bad cycle post the pandemic and took some time to recover. But I think in the last 1 quarter, we have seen the overall recovery is there. I think have been fairly good. And growth is again coming back into the space. So I think this year, I think you will see a lot of NBFCs probably do out much better than what they did last year. And related to the banks, I think you could see a better returns in the NBFC space, at least in this fiscal year.
Okay, all right, Mahesh, thanks so much for stopping by, giving us your take on a whole host of sectors. Wishing you a good day ahead. But let's get